All right, hey everybody, it's Eric from Top Flight Trades. It is Sunday, January 11th. I'm doing a quick video here. Got another request from Henry and a couple other people, Ayor, to look at a couple other stocks here. So this is going to be very brief. It won't be 20 minutes like the other one I just did. But I'm going to take a look at a couple other stocks here. So let me switch over to the screen share. Let's do it here. All right. Okay, so the first stock they wanted me to look at was EPZM, EPZM Inc. This is the weekly chart. So quick look here. You can see it IPO'd back here in June of 2014. Yeah, this is the weekly. So it's kind of hard to see here maybe, but we kind of got this channel here. We're trading between really between $18 and looks like 40. So it's quite a channel there in the last year or so. It's bounced between, but most recently it's broken through to the bottom side here. So looking at this, I would certainly love to hold some support here, even for down a little bit. You know, we could get a bounce for this thing, but it's not holding. So looking at you know, how these companies, especially EPZM, scores with Market Smith and IBD. This one gets an E, unfortunately, for very, very poor earnings and investor demand and strength. It's pretty much not looking very good for this one either. Again, you know, we get a lot of people like to bottom fish perhaps and try to find bottoms on really weak stocks. And, you know, sometimes you think you're going to get a bargain. And, you know, it's a little bit different from playing dips, I suppose. But, you know, looking at this, again, there's no investor institutional demand or on this stock. It's losing money. It's just not looking good, and the stock is showing it. So you can see this thing's been pretty much fallen from 40 back in August, and right now we're down to 1748. But let me go back here in the weekly, and you can see where I'd quickly drawn in some support areas here. This one over here, you can see this is the previous support here. It's failed and broke through. There's the bottom of this wick on this candle here. If we go to the daily, we'll see why that's drawn. That lower support is there. And here it is right here. So we'd come down to 1650 or so, bounced off a little bit, kind of trading sideways a bit. And right now we're heading downward again. And I think we're heading back down towards the 1650 area. Unfortunately, I think it will continue further. This doesn't give me any sign that we're going to have any kind of bounce. Maybe if it comes down to 1650, bounces again and starts forming new highs. If it does come down and hold at 1615, it might maybe kind of start to form a base for a bit. You know, but that might take some time for it to finally come around to find a good, safe entry. Earnings, 58 cents per share loss. Previous 40 cents. For that 22 cents. So it's just worsening. And then coming up here, its estimate is 52 cents loss. And a bet, I'm going to bet it's going to be worse than that, since last was 58. So EPZM, nah, I don't like it. I don't really even technically see an opportunity here to get in, not since it failed this. It's kind of most recently here broke underneath this area here at 1750. We'll see what happens next week, you know. But I think looking at this, we're probably heading back down to 1650. Maybe it'll form a base and trade a little while before it finally builds up and finds new highs above 20. Certainly, if I were to play this in any way, I would definitely wait till 20. I wouldn't play it now. I'd wait till at least for it to clear this area here at 20. And then maybe we might get a run up a couple bucks, you know, but we'll see. So that's EPZM. Again, fundamentally, company stinks. Technically, I'm not seeing anything right now. I think it's going to come down a little bit back to support at 1651. Next one we have is Nimble. Let's take a look at the weekly. All right. So here's Nimble Storage. This IPO'd back in early 2014 as well. So it opened up. What is that? $31 perhaps. First few weeks went up to 58. I think it's 58 for a high, and pulled back down to 19. 17 is a low. And been kind of trading sideways ever since. Again, this is the weekly chart. As far as moving averages, all we have is a 13-week moving average in green here. It's kind of hidden back here. Just above here, we have the 50-week moving average. It's just starting to draw in there. But you can't see where we are underneath that right now. From a weekly chart, weekly standpoint, with this, I would wait for it to clear, close up, a weekly candle to close up above this first support area here. And it's not exact. There we go. Up above this candle here. I'd want to see it move, but really I would be even feeling much better if it closed up above this line here. Some previous resistance back in here. Where'd it go? Oh, that's on the daily. Okay, so anyways, and or I'd love to be above the 50-day moving average. But this stock is rated a D- fundamentally. Again, with earnings and demand and strength, it's not very good right now. Here we are looking at the daily. So when you look at this, you say, hey, we're kind of waking up here. Okay, let me zoom out again. We'll take another look at this. Okay. So we talked about how it IPO'd back here at 31 or so, went up, pulled back. Now we're kind of trading sideways. So you can see where we have this resistance up here. Kind of see it as a second tier down here in this area, about 29 area. And then again, just a little bit up there at 30.5 or so. But we've been trading sideways here. So what I kind of see in my eye, looking at this, my computer's having fits today. I kind of see, I almost see kind of an ascending triangle here almost. You see an ascending base here, trend line. I kind of talked, if you saw the video on ascending triangles, I said that sometimes you'll see them at a base after a stock has fallen for a while and forms a base. Sometimes you'll see them and they'll break out. This, it failed. You see it did not reach new highs. It failed it. But I almost now kind of see another new one here. Currently. Stupid thing. Let's see here. You know, this is what I see. And you're probably seeing that as well. So looking at this bottom, this upward trending base support line, and of course, resistance here, you could see this kind of ascending triangle bit. We do have some good volume here and a nice little pop here. For a short-term play, I would keep an eye on this and see if we can break above this level here at just about 29.30. May want to at least play it safe, maybe to say $30. But to play it really safe, I would want to clear above this upper line here. So yeah, it's. I'd really want to see a lot of action. Just, I mean, clearly to see it up above this area here. I mean, not down to the penny that it clears over 31. I mean, I'd really want to see it. I mean, it might take a few days, and you know, even if you have a strong day and it trades up through there, it might pull back at the end of the day and you just get a strong wick in there. Then you pretty much get suckered into it and then it goes down again. So I'd really want to see some volume and some good action here to clearly clear these areas here. And then once you clear those areas there, you know, perhaps we're looking at 37. I mean, those are some good gains right there. So yeah, I'd kind of keep an eye on this one. Fundamentally, I wouldn't touch it, but technically, you know, you might be able to get something out of it if you, again, we have some volume and some good action there, and or some news perhaps. Increase investor demand. Next is Pandora. Oh, Pandora. Her and I go way back. Specifically, I got into Pandora in this run back in here. I think I did well on a couple of these runs and I stopped out twice, but I was still green on her. So here's the weekly chart of Pandora. Pandora IPO'd just back in 2011. You can see kind of started out kind of weak here, finally hit a bottom at $7 and some odd cents, shot right up to 40. That's a nice looking run there. Earnings back there, 2-cent loss, 21-cent loss, 6-cent loss, 1-cent loss, estimate at a 9-cent gain coming up here on February 5th. That'd be really interesting to see. So obviously looking at the chart here, you can see I drew the support resistance line, the support line here along this area from previous areas here and through here. I think it's a little clearer on the daily chart as well. And that's just happened to be where we're down touching now. So on the weekly chart, I would like it to see it hold this area. If it does and starts to bounce off it, it'd be good to put a stop just underneath it, maybe about 15. And maybe we might see some action here. I would prefer to see it above the 13-week green moving average line, though, to kind of get out of this downward channel that we see here. Again, this is the weekly chart. It might take a little time. Let's look at the daily. Pandora is also given an E rating as far as earnings and investor demand and strength as well. I think the industry is doing okay, but Pandora is not right now. So, all right, let me look here again. You know, someday I moved from a Windows laptop for 30 years using Windows and pulling my hair out. Finally switched to Mac, and some days this Mac Mini just struggles. I don't think it's the machine's fault. I just never realized I required so much computing power. Apparently, I don't play games or anything like that, you know. But apparently, I need some extra strength here. Okay, so this is the daily chart. So this is the support resistance line. The support line I drew in. I could probably zoom out a little further. Anyways, that's where I see it. So we're coming down to that area right now. It's about 16. So stupid chart. Okay. So we'll see if it holds this area. And again, coming up here on the 5th, we do have earnings with an estimate profit, 9 cents per share. Yeah, we'll see. I'm kind of looking how, yeah. Looks like a little bit of uncertainty. I mean, looking at all these volume here around earnings time. Yep. So as far as the daily chart, technically how I'd play this, frankly, I'd want it to hold 16. I would want it to clear, to close up above the 13-day moving average here. To bring a little more assurance, I'd want to see it. Then I'd rather see it close up above the 50-day moving average. I mean, I'd like to see this kind of start to base out, bottom out, and then start to climb back up again. It can do that. So don't see anything here right now. It might even be heading lower, but not any strength or demand for this right now. And you know, I mean, I think it's really going to tell. It might go down until earnings come out, and then we might get a good pop out of it. But I don't think I'd even play in earnings through this. Play Pandora through earnings. Sorry. Okay, so the last one we're looking at. Now this one, actually, I do see something a little positive here. Let's take a look at the weekly. This is FEYE. FEYE only got a D- score from Market Smith. So, you know, that's not very good, but, you know, whatever. Okay, so you can see here, this is the weekly chart, of course. This is another young company, fairly young, IPO'd back in 2013, September. So went to reach a high at 97.35, pulled back to 25.58, and it's kind of been tooling around down here. And it's come back down here to the support area. I put it at, we can call it probably about 25. This is the weekly again. But you can see we're not really making new highs. We're kind of getting lower highs and kind of getting this downward sloping upward resistance line here. But most recently here, now we're starting to break above it, break out of that trend there. So let's take a look at the daily. So that's a good sign there. We might be, I mean, we're still in this base area here. But we'll see. Let me look at earnings really quick here. So going back, 42-cent loss versus an estimate of 45. It popped a little bit there for a week or two, and then it turned. And then we had a 69-cent loss, 73-cent loss, 75. Oh boy, where are we going to be now? 83 is the estimate. Yeah, this company's just stinking. As you can see, their losses are have reported worse and worse. And then the estimate is right in line with that at 83 cents estimate. Good news is if they beat that by anything, they'll probably get a good pop. But I mean, who knows? With earnings, anything can happen. Let's look at the daily. Come on. Okay. So here is the daily. Let me zoom out again so we can kind of see what I was drawing. So you can see this upper line here. Clearly we're holding that. Finally, we popped out of it and then pulled back. And now we're going through it again. We are above it again. So what I like here is we're out of that range now, okay? We've seen this bottom support area seems to have held twice, about $25. But it was, yeah, we have this line. So we cleared it. Now we're out of it. So what I would like to see from a technical standpoint is certainly I'd like to see it clear this area. Okay. Looking back over both of these points here, I'm just going to put it there. Okay. So I would definitely like it to see it close up above the blue line there, which is 34. Yeah, say maybe 34. And this moving average, the 200-day moving average. To play it safe, I would wait for this to get above it and clear the 200-day moving average. And that might be enough to show you that this thing finally has some strength and is changing, is moving. The next area of resistance will probably be back here at 36. So you may not get a lot out of it, but you have all these previous highs. To me, they're all resistance. So let's see, that's kind of a major one. And these other ones, they're just small steps. But, if this thing does have any strength, it might clear through it. So, yeah, again, it does kind of have this base and it's starting to break out of it a little bit. I'd give it more time. I definitely want to see what it's going to do. I'd probably wait till myself. I'd wait till earnings coming up here in just a few weeks. Just in a couple weeks, I think. Oh, no, 1 month on the 11th. And by then, hopefully, the 200-day moving average will come down, and hopefully we'll see this up above it and this continue upward. So that's that. That's all I have. Hey, if on topflighttrades.com, the website, if you will go over there, I've added more content this weekend. Let me stop that there. All right, here we are. I've added more content as promised. I've been working hard this weekend. I'm sorry this video was late. The other video I did last night for Henry took all night to upload. When I woke up this morning, it had failed overnight, so I had to do it another way. That's just getting crazy. I'm actually doing these Google Hangouts. I don't have to upload anything. It's recording it live, and then just here in a few minutes, it's on YouTube, and I can get the link. It seems to be better. The quality of the video is not as great, but I am able to do these quicker and on demand, and you can join in if you'd like. But what I was saying was this weekend I was working hard on getting new lists, lists on the premium content on the website, thetopflighttrades.com. So I've updated the premiums list. I've added the new watch list on there that you've asked for. I've also included another list of stocks that have reached new highs with a very strong demand. And I've gone back, since I've been posting those, I've gone back a few weeks. I usually post those on weekends, about every week. And even going back a couple of weeks since then, some of those have done really well. So just that alone is criteria of, again, reaching new highs with strong demand is your chances of having a good winning play in them are much better than some of these other ones we're looking at that are not, they're reaching all-time lows and they have no strength. So you see, it's kind of hard to, talk and convince people about, I was in the same boat. I always wanted to find a bargain, and I always had hope that these tumbling stocks, I get in $1 and they'll soon go back to $700, and but I've been doing this I started trading like 17 years ago, I've been full-time the whole time after 17 years, but mostly more than 12 years I've been just doing this constant. And I've kind of gone full circle with it. And, after time of losing money and being wrong a lot, you pretty soon, you just want to get the winners on your team. You want the best, you want the best on your team. You want the fastest car, not the slowest car. You just want the best. And, when you do that, it increases the probability of you having successful trades and and making money, of course. And then with that, it also has it builds some confidence in you knowing that these companies perform and they have product and they have demand and they have growth and they have sales. And I could sleep at night, you know. Back when I traded pennies, oh my gosh, I was scared to go take a shower because sometimes I'd go take a shower, 20 minutes later, come back and the stock was down 30%. I can't deal with that. Getting too old for that. So anyways, pick winners. I will provide winners. Take a look at them at least. I know you probably still like pennies and the cheaper stocks, but I tell you, I'm posting this stuff because I want you to see the results and how these things do. And, you know, and a lot of them, these stocks are such winners, it frankly almost doesn't matter when you get in them. Okay. You can get in them. They might go down 4%, but they're still going to go up 30% this quarter or this year. You know, I mean, so winners, if you want money, stick with winners. So, and I will continue to keep the site updated with winners. So, all right. Well, thank you very much. And thanks, Henry and Naor. Again, they provided those picks together, well, individually, but both had common picks there that they wanted reviewed. So thank you for submitting those. I'm glad to do it. And everybody turn off your computers, go spend time. It's Sunday. There's football on. And I think I'm going to call it a day now, finally. So have a wonderful day. Thank you very much. And we'll talk to you soon. Happy trading.